All right, testing, 1, 2, 3. In fact, I don't even know if it's running. I'm getting errors. Can you confirm? Can you confirm that we're actually live? I don't think we are actually. It's weird. I'm getting error messages, but my internet is strong enough. How interesting. Huh. Yeah, see? Let me type it in here. Can you hear me? I don't think so. Some weird YouTube. Can I even restart? I think it'll come out as a new stream. Let's see if you're there. While I sip on my ghee, my coffee with ghee. Yeah, I don't think, well, maybe it's my page. Why don't I refresh the page and see what happens? Oh, yes, you can. It was my page. So YouTube was giving me errors and wasn't updating. So anyways, look, now it works. Great. All right, so we got some news coming out in a half an hour. That's the thing we need to watch. So welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Guten Morgen, so how are you? Oh, I just noticed in the camera. Check that out. My new laptop. You see that? Interesting, right? It looks like two screens. It's actually three. Because there's one on the keyboard, then there's the regular one, and then there's the upper one. The upper one, the other one is weird. You flip it over, and then you fold it, which is kind of interesting. And so then it's protected. And then you just pack it up and off you go. And of course, nothing has to be plugged into a wall, which is cool because it all runs off the battery, which is nice. So anyways, triple screen, very cool. So welcome to Forex.Today. We have news coming out at the bottom of the hour. So we'll just do that. Well, we'll see. Today is probably a continuation of hedging day. Hedging day. Okay, a lot of profit taking going on. Well, welcome to the end of the year. That's what happens, my friend. We had a big sell-off yesterday, and it happened in 2 hours, dropped 1.5% in 2 hours. So in 2 hours, we wiped out 5 days worth of up. So so let's see what happens from there. If you need a broker, yo, I'll solve it. An ECN puts your trades directly into the interbanking system. They don't trade against you. Traders Way needs you to succeed, and they believe in your education. If you succeed, they succeed because they end up providing you with a service. Day in and day out for years and years and years, they provide you a service. There's a small fee attached to ECNs. Yeah. It's the same, like it's a spread is a soft dollar thing. A commission, if you want to call it that, is a hard dollar. They're one and the same, if you ask me. There's a cost to placing your trade. So anyways, look, if you succeed, then you're going to be a successful client with them for years, and that gives them the most optimum return. They want you to succeed, and that is unique in the brokerage world. Tradersway.com, investorbootcamp.com, tradeplans.ai, quantbox.co. All services that I recommend to you, or are actually mine. And then, look, there's some free stuff here. A 90-minute lecture on risk rewards for trading stocks. It's actually quite interesting. Which stock is more expensive, $80 or $8? I'll teach you how to answer that question using math. Don't be afraid. Be very afraid. So in that course, we have to do risk-adjusted performance analysis. It's free. It's 90 minutes long. It's a full lecture. There's no sales pitch in it. It's literally one of the lectures out of the training course. Some of that had to do with the rotation 2 weeks ago. I covered that today in the QuantBox live stream. Good morning, DITCC. Ashraf says he's long gold. What do I think? Well, right now there's no reason to own it. Okay, but yeah, maybe someday it'll work out. We'll look at commodities. Oh, I guess I was already on commodities. We've hit our profit target. So if you remember the trade plan for the week, which I set up last week for you, because that's how you trade, was to get this up to 75. We got to 75, 15? And then a total drop. So that is, right, we had the up, we had the down, we had the up. That happened. Now we're in profit-taking mode. Lower low, lower high, lower low. Basic price action. If you don't understand price action, go to investorbootcamp.com, pay the $88. That gets you all the training courses. But in that training course, right, in the bundle of training courses, One of them is on price action. If you don't know price action, you don't know how to trade, and nothing will work for you. I don't care what indicator you decide to use. If you don't understand price action, none of it's going to work for you. So the good news is $88 fixes that problem permanently. Okay. Moses took a shot on the south side. Okay, that makes sense right here, hey? Yeah, he's like, I got that from you, Sir Wayne. Sir Wayne, oh, that's much too formal. Just call me Mr. McDonald. I pulled that gag on some kid that came over. I guess it was probably a boy courting my daughter. I said, hey, so what's your name? He tells me his name. Shake his hand. I'm like, oh, my friends call me Wayne. You can call me Mr. McDonald. Oh, yeah. All right. So yeah, so anyway, it makes sense to me. It makes sense. We hit our weekly target. The markets are getting really thin. Every day, more and more smart money is done, and we're just left with dumber and dumber money. What I describe as degenerate gamblers and just people that don't know. Smart money has already made its profit. So anyways, we're at the lower bound for the day. If this was going to continue for a while, you'd probably get some up and then some down tomorrow. What do you guys think about that? We'll see. Maybe it'll keep pulling it down, huh? Yeah, it's moving it. Okay. Anyways, so yeah, that's happening. Yesterday, in a 2-hour period, the stock market dropped almost 2%, and gold did nothing. Which is another way of analyzing that nobody really cares at the moment. But why don't we take a look, like if you wanted to be long gold for a long period of time. And that's what Ashraf Ben has told us. All right. We could do something like this. Let's play around with this idea. Gold this year hasn't really done much. Okay. We we started the year, okay, at central. Then we went to M3, which is a price that bears sell. And then it came down to the central, a price in which bulls buy. Then it went to R1, which is a price that bears could sell. Okay? And then we worked our way back all the way to the point where on October 1st, gold had made no money for the year. Okay, then we rallied up again, higher high, relative to the previous high. So you set up the higher low off the previous high. Then we had that ginormous spike, which was nonsense. And then it came all the way back down. And then maybe we're setting up again. So, but this price action is terrible. This is a terrible asset. But if you had to own it, next year you might say 1992 predicts 23.24. But why don't we just say 23.23 is the target? What do you think? Yeah, but Osama, nobody cares about GDP. Nobody cares. It's already done. We're way past the GDP. How about, well, is there anything else in 10 minutes that might be important? I mean, remember, GDP is backwards looking. The final GDP quarter over quarter. What quarter? Third quarter? Dude, we're almost into the first quarter. Like, nobody cares. Claims, maybe. It's not that dramatically important. Anything else? So we could look at GDP. That's fine. We know it's a big number. We already know that. What else? Personal consumption expenditures. Do you think PCE matters? Richard says, you were on to something yesterday with the drop. Uh-huh. PCE. Or is it maybe the Philly Fed? So you got to go to the Bureau of Economic Analysis. Lovely. I'm interested in irregular updates. What a wasted word, huh? It's a wasted word. It was unnecessary. I'm interested in updates. That's not even the right website. How did I get here? What did I do? Commerce.gov. That's BEA.gov. Does anyone remember it? Yeah. I don't even know how it got there. Okay. So anyways, we'll get that. This is coming out very shortly, about 5.5 minutes. Ashraf Ben says the big move yesterday in the market was scary. It was somewhat expected, so it shouldn't be scary. I mean, I talked about it quite a bit yesterday in the stock markets, in particular the Dow, and I talked many times about how much of the money had rotated out of NASDAQ and into Dow, so Dow was leading, which is very unusual, and then Dow was at the top. So I said one of two things. The market really wants to push higher and get up here, in which case S&P 500 should get to its target and really pull the NASDAQ up to its target. That's what I said. But we could have profit taking now, which limits the upside to everything else. We actually got this close to the S&P. This is the Dow. So we got target. We almost, I mean, that's a rounding error. But the S&P got to its target, or very, very close. And then NASI, okay, got to the R1, M4, M4. And I'm like, you know, and that could pull everything down. And it did. So it was either up and out or out and out. But there's no, like, shouldn't be scary. You should have been, I don't know, ready or prepared, at least emotionally. So today, my big question that I'm asking myself is, do I drop a hedge? Do I pop a hedge, maybe around here? Well, it depends on what happens today. Oh, so I have a reason for being. I have a reason for being today. Will I hedge or will I not hedge? What shall I, how will I know? Okay. Yeah. Oh, right on, Richard. That sounds like fun. But if you're going to do income, you should probably do gross domestic income and not gross domestic product. GDI, not GDP. Because you're kind of doing it backwards that way. You're measuring productivity, and then you're like, well, how does it impact income? Right? Well, GDP, and gross domestic income, or it might be gross national, it might be GNI, domestic or national, same, right? But anyways, they should equal, okay? Because one is a receipt of what you spent, and then the other one is an account of where your cash went. Like they're the same measure, but from opposite sides of an equation. Okay? Because spending should equal production. Production should equal income. Or your government has done something to screw everything up, and that would create massive inflation, because if your income didn't create productivity and your productivity didn't create income, what happened? Even if the government takes all over the factories and decides instead of making cars, they made tanks, well, there's still productivity, and the government spending has increased, but the productivity shouldn't increase. So on the flip side, if they create income, but there's no productivity, then the government has printed money or borrowed money. And that's bad policy. And that creates inflation because there's no productivity attached to it. It's unnatural. It's unholy. If you produce something, you should get paid for it. Therefore, you can take your money and go buy something that somebody else produced. That's normal. That's natural. There's a circular flow of money, which is a normal thing. So the unnatural, unholy, the evil thing is your government gives money away for free. And it always leads to long-term negative consequences. Okay, 5.2. So we already knew it. Great. 5.2. Holy smokes, eh? Oh my God. Okay, so shocker, it's the same as we already knew. All right. Let's get our data. Yay, yay. Okay, cool. A bit of a downward revision there. The price index for gross domestic product purchases increased 2.9% in the third quarter, a downward revision from the previous estimate. The personal consumption expenditures price index increased. None of you guys answered this, huh? I said, what's important? Okay. PCE increased 2.6. They trimmed it a little bit. Core, okay, increased 2%. That's interesting. And I think we were thinking 2.3. So core inflation is much lower than before. Very interesting. So actually GDP is 4.9 though, isn't it? Yeah, somebody put in the wrong number. Somebody put in 5.2, but that's the old number. So it's actually 4.9. That's a downward revision. Yeah, Kevin saw that too. Osamu has bad data. So I just quickly pulled this up. I wasn't even looking at what was reported. So anyways, yeah. Gross domestic income. There you go. There you go, Richard. GDI increased 1.5%. The same as previously published. So here's your, okay, GDP. So it was 4.9, then it was 5.2, then it was 4.9. I don't know if it was expected to be 5.2, but it was 5.2. Right? I mean, I always question, like, who expects what? But anyways. So here we go. Core was 2.4, then it was 2.3, then it was 2.0. But remember, this is backward looking. That shows the drop in oil prices. Very, very important. Okay. Headline 2.9, 2.8, 2.6. So inflation, right? Inflation drifting downward steadily on the headline number. So that's good. Okay, that's good. We're not through the free and clear plan. So let me show you what that means. Where are we going to be challenged on these stock markets? I am going to go to indicators, and I'm going to put everything, because you're probably already a bull. So you want to see where you are bearishly. And we're still in a sell zone. We go here, indicators, bias. I'm not a bear. I'm looking for evidence for needing to hedge. So we got a bit of a pop. Remember, inflation has come down. The Fed can cut interest rates. So bad news is good news, remember. And we put this, and this is where, if there are bears, where they're going to sell. Okay? And we're still in those zones, although NASI is going to try to pop above it. I have my price action resistance lines, which are different than pivot points. You could use Fibonacci, okay? Whatever. It's about the same thing, huh? Yeah, they're all about the same. And so again, the question I'm asking myself is, do I need to hedge for downside risk? Because I'm a bull, what that means is hedging means shorting without exiting my longs. Okay? And so that's the question I have on the table for today. And we're right in that zone, and a little higher, like if this turns into a bullish day, and the narrative around that is that PCE has fallen. Remember, it's not about GDP. PCE has fallen, and that means there's less inflation, which allows the Fed to cut. All right, cool. And that's bullish. So we're thinking, the stock market here is thinking 3 to 6 months in advance. What they're thinking about is this. Based on the information we just got, will the Fed cut interest rates in March? Let me ask you. I'm going to add a poll, and I would love for you to participate. Would you please? Okay. Will the Fed cut rates? I didn't spell it right. Rates in, I'll just say Q1. January, I'm going to say it. In March 2024. Okay? I don't think they'll do it before that. So let me be as clear as possible. Yes, no, and then I'm going to add a third one. No idea. No clue. No clue. All right, please answer the poll. Because this is what's happening right now, these green candles in front of you. People are asking themselves this question. Don't type it, answer the poll, Mark. Well, thank you to the person who just gave me love. Little hearts were flying. Just please click the thumbs up button. Click the like button. And just tell YouTube this is, Osamu says, but it's a presidential election, though. In November, Osamu. Don't overthink it. It's almost 50-50. How will I know if this could be my What if the crash starts when they okay. I don't like the wording. Ashraf. I don't like what if. I don't like the crash. So Ashraf, you're speaking emotionally, but asking an intellectual question. So you need to scrub what if the crash. You need to change your language. You can't be a professional trader. And you're like, I'm not a professional trader. Shh. I'm trying to teach you how to be one. Okay? So in this case, I want you to do some research. But you definitely need to change your language. Yeah. Okay? Do I think there's a risk of inflation returning? Yes. If the Fed does cut rates, not because they cut rates. All right, let's go back to some basics. Let's do some basics, guys. Okay? What was PCE? 2.3? We'll do 2.3 PCE, and we'll do 5.5 Fed funds rate. Okay? So the spread is 320 basis points. That is ridiculously high. That is incredibly restrictive. And in many cases, inappropriate. So they could cut from 3.5 to 4.5, okay? And this drops to 220 basis points. That too is too high. So what they have baked into our current recipe is cutting interest rates by 0.75 next year. 75 basis points, which is, okay, very, very, very high. So now 4.5, okay, what's been priced in and may not even happen is 4.75, okay, which is 300, okay, and what, 45 basis points. And you're like, Wayne, I can't even read this anymore. No, it won't crash. The cuts won't crash the market. It does make money cheaper. Could it bring some inflation back? Maybe. But at 300, let's just say at 350 basis points, or was it 350 or 250, I said. Even at 250 basis points, it's restrictive. It's typically closer to 1 or 1.25, depending on your measure of inflation, whether it's CPI or PCE or whatever your variable is. Okay. so let's say this is normal, and we're at like 350, not 250. You see? And we're only cutting by 0.75 next year, if at all, maybe only 50 basis points next year. We are very, 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 very restrictive. And if we drop by 75 basis points, it's still restrictive. So will the cut create inflation? No. So what would create inflation? Oil. That's it. I think that's the only real risk. The other risk would be closing borders and stopping international trade, all that kind of stuff. Now, when I say closing borders, I mean tariffs on foreign goods. We have a real problem at the border. I thought Kamala Harris was the border czar. When the United States elected Joe Biden and Kamala Harris, I thought her number one job was to fix the problem at the border. Wasn't it? They literally called her the border czar. Like, what the hell is happening? Like, dude, when do we get a report? Did they change their mind on that? New York City is about to collapse. How come nobody's doing anything about it? It's turning into San Francisco. I used to love San Francisco. And it's gone to hell. Pardon my French. It's really sad. It was so beautiful. San Francisco was so awesome. Oh my God, it was such an amazing place. Yeah. New York City was a hellhole in the 70s and 80s. And then Giuliani went in the 90s and fixed it all up. Okay? And I was there in the 90s. I remember traveling on the New York City subway system and popping up at Times Square and then walking, was it, or maybe it was the other way around, walking to the office? No, it would have been midnight. This was midnight. So I think the train station was closed. So we were on, I think it was 50th. So at midnight in 1995, it would have been a February, I had a computer bag over my shoulder, which was unusual back in 1995. Very few people had laptops. But I had a Windows 95 machine. It was 1995. And I walked from 50th to Times Square, and it was safe and clean. And then you could go down to the subway, and was there even a subway there? I don't know. I can't remember. But somehow I got on a subway and had headed downtown towards Chelsea, where I was staying, in 1995. And I remember that because Windows 95 was a big deal. I worked at Apple, and it said Apple 89, Windows 95. Every Apple employee had this on their bumper of their car. Apple 89, Win 95, because it was a total ripoff. So anyways, all right, let's end the poll. But anyways, yeah, the situation at the border of Texas and other places is ruining New York City. And rents are actually falling. The city can't afford putting up tens and tens and tens and tens of thousands of immigrants living in hotels for free. The city of New York is spending like $4 billion a year. And so now they're cutting back on police and the fire department. That's just not good. And I don't think it's New York City's fault, and I don't think it's the migrants' fault. But whoever's in charge of the border, Well, it ain't working. It's horribly bad. Well, whatever it is, like, I'm not saying it from a political point of view. I'm just saying whoever is in charge, and we know, I mean, at one time, Kamala Harris was the border czar, but that was 4 years ago or 3 years ago. So I don't know if things have changed. I don't really pay attention to regular news. I just read economic data. So from an economist's point of view, and then when I see New York City, a city I love New York City, but I only know it from the 90s. When you look at it in the 80s and 70s, the place was horrible, and it very, very quickly it's going horrible again. And it saddens me, it bothers me. Man, New York City, I have such amazing memories of New York City. Oh, it's such a wonderful place. I would be saddened for it to crumble. Oh my goodness. He definitely did. And so 95 was Giuliani's time. And they did clean up. So what I was trying to say is, in the 70s and 80s, you could not go to Times Square during the day. And there it was in 1995 with valuables. Because back then a laptop was $2,000 or something. And I'm clearly from out of town. I mean, look at me. Yeah. Victor's like, it's all part of a bigger plan. What's the bigger plan? Yeah, ruin everything. Huh? But anyways, I have a love for New York City. I really do. And I have a love for the San Francisco that I lived in. Again, in the 90s, the world was in a magical place. San Francisco was great. Yeah, I hope not, though, Maida. Jungi's yeah, I saw what you wrote, and the thing is, it's going to you only have a certain amount of money, right? So if crime is going up, why cut down on the police? They're spending $4 billion putting migrants into hotel rooms, and the city is paying for the hotel rooms. Because a long time ago, like in the time of the 1970s, there was an issue with homelessness in New York City. And a law was passed through some sort of judgment that the city of New York City, not New York State, not the county, the city of New York City was required, if somebody asked, like if a homeless person asked for shelter, it was required by law to give them shelter because of this judgment. Okay, so a very liberal point of view, but it was very liberal back then. Okay, so the law was passed. I'm not here to say if it's good or bad. The law was passed. So now we have migrants, but it's not like a couple of hundred homeless people. It's not like 1,000 homeless people. It's thousands of people every month coming to New York City because they get free housing. And so now it's billions and billions and billions and billions of dollars. And it's not getting better. And it's not good for the people either that get there. They're like, this is the land of the dream, the land of the free, the home of the brave. This is the richest country in the world. And pretty soon, right, all the homeless shelters are packed. So where do you go if you're homeless? All the hotels are packed. So now tourists don't go there. Crime is picking up. They're cutting back on schools. They're cutting back on police. They're cutting back on the fire department. They're cutting back on services. So there's garbage all over New York City now, like it was in the 70s. New York City was a horrible, dirty, crime-filled place. And it's becoming that very, very fast. And now jobs are leaving, people are leaving, rents are coming down. And it really breaks my heart. That's all I'm trying to say. So if we had a better situation at the border, we wouldn't have the problem in New York City. And there's nowhere to put new immigrants, so I think what's going to happen is it's going to go, it's all going to go to Chicago. Yeah. So, but yeah, so anyways, it breaks my heart. I'm not saying politically one way or another. The law, well, the law is the law. If you don't like the law, change the law. So yeah, it's sad. It's sad. It really is sad. So anyways, so we're hitting our zones. You see the zones? Roderick says it's horrible in Chicago. Yeah. And Chicago already had problems, right? Chicago's had problems for decades as well, going back to the 60s and 70s. Chicago is unique in that way. So more problems is not, right? Oh, sorry. Yeah, well, I'm just looking at these zones. These zones are what matters. But yeah, no, I get you, trucking mogul. I got you. It is an economic situation, though. I know I sound political, and of course I am, but I'm trying to keep it focused on the economics. It is money. Okay? It is money. Economics is political. Well, or politics is economics. I guess I'd say it the other way around. You have economic policy, right? Now the politics, okay, the politics, so you can go conservative or liberal. What the difference is, how do you spread, let's say, the benefits of an economy? How do you spread it throughout society? Okay? And so the decision of how to spread the benefits around society is politics. So economics is political. I'm going to say it the other way. That's all, Meta, right? That politics is the choice, a conservative or liberal or somewhere in between, handle the distribution of wealth through a society. Economics creates wealth, and then you transfer or distribute the wealth throughout society, either in a liberal way, in a conservative way, or somewhere in between. So it is a choice. Okay? And so New York City, for example, can make a decision, going back, right, and say, wait. 50 years ago, a decision was made to help 500 homeless people. Total. And now it's being applied to a situation where it's being applied to 5,000 people per month. And it's been going on for a year. And now it's 50, 60,000. Not 500, not 5,000, 50,000. Not 10x, 100x. And you're like, well, maybe it's not the appropriate policy for this situation. And it should be adjusted or changed or something. Somebody should do something. Either fix the border or change the law or whatever. But whatever. It is a choice. It is economics. All right. So we are in the zone. You see it? We stopped on my zone, we stopped on my zone, we stopped on my zone. Cool. And you're like, what zone? I can't see that one. It's there. Delete. You see? See it? Where is my zone? You see? So, the reason why we're just babbling today is I've already marked this out for you, and you should know the importance of what I've marked out. It will dictate what is going to happen in the foreign exchange market. It's going to dictate what happens in the commodities market. This is the most important thing. Do you remember City Slickers? Jack Palance, I think his name was. He said, the secret to life is one thing. And they said, well, what's the one thing? And he said, that's the thing you need to figure out for yourself. I'm looking at this, that's the one thing. And from that, okay, you learn there are 10,000 things. So here we are. The Book of Five Rings says to be a master, you need to know what the one thing is. And if you know the one thing, then you know 10,000 things. If that holds and acts as resistance, dollar gets strong, yen gets strong, Swissy gets strong, pound comes down, euro comes down, Aussie comes down, Kiwi comes down. Stock market comes down. Okay, probably oil comes down. Okay. Look, I know maybe it's not 10,000 things, but that's an analogy. It is the way. Okay? Yeah. It's such a great book. Just seeing if there are so many quotes that I can find that just jump out. The advantage of the two aspects of strategy. Yeah. Do you know the two aspects of our strategy? Fundamentals and technical. Fundamental analysis, technical analysis. I mean, it's amazing, right? Here's the way for those who want to learn my strategy. 1, do not think dishonestly. Notice the first thing is psychology. 2, the way is to train. 3, have knowledge of every art. Technical analysis, fundamental analysis, trader psychology, economics, finance, all arts of money. Know the way of all professions. Retail, institutional, hedge funds. But you could also look at professions, bond traders, stock traders, options traders, Forex traders, oil, gold traders, Bitcoin and crypto traders. You should know all these professions. Know the difference between, this is number 5, know the difference between profit and loss in worldly matters. You actually know this is not a video game. It's not Fortnite. It's Forex. You have to have an attachment to what you're doing to reality. Number 6, develop intuition and an understanding of all things. That's experience, isn't it? But it's the understanding of all things. What is your intuition? Where does it come from? What is the record of it? What are your strengths? What are your weaknesses? You know? Number 7, see that which cannot be seen. Your focus should be on accurately predicting the future. Nobody can see the future. But you need to be able to see which cannot be seen. Number 8, attend even to the seemingly insignificant. Read the damn report. Why? We already got the numbers. Yeah, read the report. Because you're the type of person that reads the report. You don't just get the number off of a calendar. You don't just listen to somebody on CNBC. You do the work. Attend even to the seemingly insignificant. The fact that you actually do the work yourself is what matters, even though it's maybe insignificant in of itself. Number 9, do nothing which is useless. Do not waste your time trying to find magic indicators, different systems, better gurus, trying to find the crystal ball that doesn't exist. Do you know what all these rules are? I've applied them to trading, right? And investing. But this is the art of mastering samurai. Literally, samurai sword strategy. We're talking about a book that was written in the 1600s. And we can learn a lot from, right? Samurai warriors. Remember, the number one thing is psychology. It's pretty incredible, isn't it? So, I couldn't find the no one thing, no 10,000 things. Okay? But notice, like, that's the price on the chart that matters now. And every single one of these held. JP says, hey, the more the reason to master trading so we have something to help other people. Well, that's one of the aspects of the Council of Investment Advisors, which I run, is that you could put money aside and that money can produce more money forever. Well, what do you do with that other money? So it's a very different, unique strategy in the sense that I'm teaching people to manage money in which the money lasts in perpetuity. The money lasts forever. So you could put whatever sum of money aside, manage it and invest it appropriately, and the income you produce can support your charity, your church, your community, your family forever. It's one of the most beautiful things about money. And in the United States, you can create entities that can live when you're dead. Rockefeller's been dead for what, 100 years, 150 years? I don't know. He's been dead a long time. And he's still giving away hundreds of millions of dollars a year. But the problem is, I guess it's not a problem, but like the concept is that the money that he had 150 years ago is still alive. And that money makes money. It multiplies. Money is like a virus. You can have so much money that you don't know what to do with it. Now, if you spend your money, you'll be broke forever. If your money makes more money and you live on that quote unquote productive money, but you're right, or the, let's say not productive, but the output money, you can live forever. And then when you die, that output money can go to charity. It can go to your church. But the thing is, the accumulation of wealth generates income, and the income can be spent. No, dividends are not enough. That's the problem. You can't how much money do you need to live on 2.5% a year? Okay, right? You're like, okay, so I put in $1 million and I'll live on $25,000 a year. Where in the world are you going to live on $25,000 a year? Cuba? North Korea? I mean, dude, it's just not enough. So no. Yeah, Algeria is nice. Huh? Somewhere out in the desert? Somewhere inland? Nice and cheap? Indonesia, yeah. Yeah, well, people could do it, right? The thing is, if you saved $1 million in cash, do you want to live in a small rural town in the desert of Algeria? No. So you need a better return. And so institutional investors have this problem too when it comes to pensions. So like a museum. Okay. So the number really is 8. That's the industry standard, 8. Okay. Can you make 8% in dividends? Yes. If what? If you take on risk. If you do like real estate investment trusts, what do you call those partnerships that oil companies do? Partnerships, closed-end funds, all that kind of stuff, right? Was that right, Ashraf? Ashraf says, no, all right, cool. So anyway, so the problem is to get the 8%, you have to do risky stuff, like venture funds. So a lot of this is too correlated. A lot of this is illiquid. You know, like the economy has a downturn and your REIT just, right? And you have NAV depletion, net asset value depletion. So, no, to get the 8% on dividends would mean you jack up risk. Well, I thought you wanted your money to live forever. How, right? So you're trading and investing like a degenerate gambler, but you think this money's going to be around for hundreds of years. Well, what does a casino know? The more you're a gambler, the more likely the house wins. The more the gambler gambles, the likelihood of the gambler going broke. So you just can't do it. That's not the right way. So you need a wicked smart supermodel, and they can do it. So anyways, I teach this stuff at the CIA. These are big questions. Our last meeting was 10 hours long. Okay? So anyways, but it shows you the importance of what we do, in my humble opinion. So here's the one thing, and from that, you know 10,000 things. Your big question now is, do you buy the dip or did you sell the rip? And you're like, wait, what? What? No, you don't understand what's going on. If you're a bear and you haven't done anything yet, you don't understand what's going on. Don't get upset. Don't get mad at me. I'm not peeing on your blue suede shoes. The more you admit to yourself the reality, the better off your future outcome will be. So we were here. I drew it a half an hour in advance. We hit it and it dropped. So you sold it, right? No. Oh. So how are you going to behave when we get down here? This is where a bull would buy. Are you going to buy it? Okay. You can do what you want, but don't pee on my blue suede shoes. Thank you. Thank you very much. Okay. So anyways, la-di-da-di-da. Okay. Just good to know. Just good to know stuff. Okay. No denying that those were the right prices. Yeah, Kendo. So, Kendo, do you, you're self-employed, is that right, Kendo? You pay self-employment taxes? Okay. Do you have an SEP, a SEP plan? It's a simplified employee pension fund. Okay. Great. You got it. So you want to max that out. Oh, you don't. All right. You're losing money like you're losing millions of dollars. Yeah, you need the Wayne. You need the Wayne. Yeah, I'm telling you, not only are you losing millions of dollars, but you're paying way too much in taxes. You need the Wayne. Blame it on the Wayne. Blame it on the... I'm telling you, you're not doing it right. You're missing a crazy... oh my God. Everything's in an LLC. Yeah, but so what? I'm telling you, so what? You're burning so much. Oh my God, dude. So anyways, I'm happy for you. You're doing everything right, but you're leaving what could amount to millions of dollars a year, or you're paying on about, I think it's $66,000. You're paying taxes on $66,000 of income you don't need to be. Oh, is that right, Robbie? I didn't even go to check that. That's interesting. Thank you, Robbie. I appreciate that. So it wasn't just monthly R1. Is that right? So let me kill this. Let's look at that. Thank you, Robbie. Oh, yeah. Oh, my God. Thank you, Ravi. Dude, seriously. Look, point to point, guys. Point to point. Point to point. This is straight out of the training course. M2 on the first day, and near the last day, M4. That's in the training course. Thank you, Ravi. I really do appreciate that. Kendo, you need to join the CIA. Like, I'm telling you, you're gonna barf up a lung. I was gonna say something more inappropriate, but let's just put it that way. You're gonna barf up a lung when you find out what you've been doing wrong and what you can change right now. Like right now. I mean, there's even time this year you can put it together if you hire a lawyer that can move on something like this. Oh my God, what is it? You got days. I mean, you got a week and a half. Oh my God, could you pull off a SEP account with the holidays in there? You might be able to. Now, I don't know if there's backfilling rules, like if you opened in January, can you go back on your 2023 income? I don't know. I don't know about that. Oh my God, yeah. Dude, seriously, I'm telling you, Kendall, I'm totally serious. You need to join like today. Yeah, look, it's $2,400. It's not cheap, but I'm telling you, the way you're doing it, you're leaving, you're losing, you're paying tens of thousands of dollars. Well, is it that much? Probably, yeah. You're probably leaving you're overpaying your taxes by $15,000 a year, let's say. But on top of that, you're not compounding the money into the future. So, I mean, you're leaving hundreds and thousands, millions. I don't know how young you are and stuff like that, but dude, it's a massive mistake. So anyways, I can fix it, dude. I can't express any greater than, I guess the only thing I can do is bring up the link, investorbootcamp.com. But here's the thing. So I have one of these accounts open because I am a small business owner just like you. And so you'll watch me. In fact, you'll manage my account for me. And then, of course, you'll probably do the same on yours. Yeah, there you go. Yeah. Yeah. It's so funny. Yeah, so funny. There you go. All right. Yeah. Dude, what a year, huh? What a month even. I'm really happy with the way things turned out. I'm exhausted though. Doesn't it feel like it's been what do Americans say? It's been a minute. I'm like, by minute, do you mean a long time? It's been a minute, hasn't it? Yeah, so anyways, look at that. Just wonderful move. This may actually be the most perfect year I've ever seen. I don't recall something that dramatically perfect. That is insane perfection. M2 to M4. That's insanity. I've never seen something that precise. I almost hope it doesn't go higher. Because the next level would be so much higher. We ain't going there. So, oh my God. That is just so ridiculously fascinating. So I imagine we're going to run into like this. And that's our line for today, isn't it? Very interesting. Wow, that is dramatic. I think if that holds, I want to like print this out and put it on my wall. I mean, look, when I first started trading pivot points, they didn't even exist. I had to hire a programmer to program these things. Then I'd go to conferences and I'd teach people, and the brokers didn't have pivot points. So I had to give my software away free to my members, but also to the brokers, so that just people I've never met had them. I wrote about them, I put them in training videos, I spoke at conferences, and then in 2007, I put them in my book. And I said, if this is the bottom, this is the top. It's been written down on paper. It's in the Library of Congress. It's going to live forever, that knowledge. But to think it's that accurate is, to me, just thrilling. It means I've taught a lot of people how to trade pivot points, because that wasn't the case. They were accurate, but not that accurate. Like, that's insanity. That is crazy. How beautiful, huh? Well, one of the things I asked people a year ago as we entered 2023, I said, I challenge you to try to hold a trade that lasts many months, maybe even a year. I think for a while there we called it the Johnny trade. I said, look, many of them are going to fail, but I just want you to try. Okay. How many people attended the 2023 annual outlook that I did back in 2022? Any advice? Kando, have them go to YouTube and ask YouTube, how do you install an MT4 indicator? I can tell you the mistake he's making. He's dumping it into his downloads folder, and he's not doing it right. He's not installing it into his MT4 installation. So right? But anyways, okay, Denise, Roderick, Lucas, Osama. All right. So, key points. Okay, March to April is a period for buying. Okay, that was one. For those, right? Of course they are. They're getting installed in his download folder. Okay, let me finish this and then I'll go back to that candle. All right. When in the year, if March is a buying period, when in the year did I predict a pause in the stock market going up? A pause or a chance to take profit, or even to hedge, but no longer up being the theme. Does anybody remember? Okay. I'll give you a hint. I plan my vacations around this number, this day. Okay. I believe we did the event somewhere in here, didn't we? In December. So the first one prediction is 3 months in advance. Okay. But when is it? Rabbit season. When is it? What date did I predict to start culling the herd? Can you be more specific than that, Lucas? Thank you. So lots of people said Canada today, and that is the answer I'm looking for. And I believe that's this day here. Oh, Wayne, it's not perfect. I know. All right, cool. And then I had you guys in this September area. This drop, I believe, is the terrorist attack. We had the upward momentum, and then there was terrorism. Okay? So, can anybody confirm this? That these are the key moments in time buy, I don't know if you want to say sell, but sell, buy. Or at least buy, hold, buy, or whatever. I think you understand the logic. Can anybody confirm that we talked about this 3 months, 7 months, and 9 months in advance? Cool. Now, I think I charged a premium for that. Was that the one I charged $11 for? Cool. The point I'm trying to make is not that I can see the future, but you have the information. Okay? QuantBox now costs $79 a month for the Pro version. It wasn't even available before. Now it is for $79 a month. You used to have to pay $800 all up front. Now, today. Now it's $79 a month. Very accessible. You need, right? So that's your fundies. You need to know how to do technical analysis. And most of what you probably think you know is not completely accurate. There's probably a huge focus on some sort of indicator like MACD. No, MACD sucks. Use Stokes. No, Stokes sucks. You should use RSI. No, RSI. No, RSI sucks. You should... I mean, dude, they're all the same. No, use CCI. No, use average to range. No, average. Oh my God. All of this stuff is important. But if you don't understand the way that the market works, none of that matters. Doesn't matter what tool you're going to use, you're going to lose money. All of it. Because, right? You don't get it. You're just not on the clue train. And there are lots of gurus that just say, well, this is my favorite indicator, and if you just know how to do this, you're going to make millions. Oh, my God. All right. So anyways, join Investor Bootcamp. It's $88 a year, and you will learn tech. You're going to learn a lot more than that. You're going to learn monetary policy. You're going to learn macroeconomics. There's a lot of other stuff. But dude, fundies and tech. This is per year. This is per month. It's ridiculously affordable. Right? Like talking about the CIA, it's $2,400 a year, right? But like with Can Do, it's like it's gonna make like 10x difference to have this information. And watch me do it with real money. I mean, it's just like, oh my God. I price everything appropriately, in my humble opinion. It's accessible to everybody that needs it. Okay? I'm trying my best to make a difference. I mean, ultimately, I want to have a purpose in life, right? If you want to know. So all the information's there. So if year after year I can do that, where I'm like, this is where there's a buy here, there's an exit here, there's a buy here, there's an exit there. And these tools are within 1 point of accuracy 12 months in advance. Then there must be something to it. That can't be a random walk down Wall Street. So you should drink the Kool-Aid, join the cult. You don't want to fight it, you want to love it. And I just might actually do that, Roderick, right? So, peace on earth, may the pips be with you, may our profits be above average.